Well, of course, so with this, just one of the many developments we're seeing in the African financial arena at the moment, Emilio Pera, lead banking and capital markets director at Ernst Young, joins us now to look at some of the issues currently at play within this space. Emilio, thanks so much for joining us again.
Good afternoon.
Well, we have really seen this phenomenal interest being shown by African banks in extending their reach beyond their own, national borders, so to speak, extending their African footprint. What are you making of the strides we're seeing in this regard, where we've just seen Nedbank and ETI's tie-up, a case in point?
If you look at the representation of the South African banks across the Africa sub-area, it's clearly that the Standard Bank is leading the pack from a South African perspective, but as was just mentioned,
17 versus 34.
with Ecobank's presence in countries where none of the other global players are operating, especially if you look at the Saharan countries and your Francophone countries, it is definitely going to increase the competition in that market. I suppose if you look at South African banks, the focus at the moment with FirstRand and Standard Bank, that's indicated that they're looking to expand into Nigeria, similarly Old Mutual and ABSA as well. I think that's a market that we need to look out for. This
happening at a very interesting time where, of course, we've had the recent financial crisis bearing burdens, but still, despite it, I mean, there's two things to consider here. We've got growth and expansion, as we've been talking about happening. We've got African banks having remained relatively unscathed through this entire financial crisis. Just how do you see the crisis changing the regulatory environment as we grow?
That is, at this stage, a clear indication that there will be significant changes in regulations, largely driven through developed markets in the countries which was most impacted by the crisis. And I suppose the risk is, if you look at emerging markets and the African market, that some of those regulations might not be completely appropriate for our markets. If you look at areas like some of the liquidity requirements, if you consider executive remuneration as an example. So a number of those are areas that, if it is looked at rolling that regulation out globally on a consistent manner, the developing markets need to provide input, which fortunately we have the benefit of representation on the G20 to do that.
This in a context of what kind of risk? Because, I mean, there was a recent risk survey. What has that revealed about risk in the financial sector, and what are the implications for our banks on the continent?
If you consider South Africa, which has implemented Basel II in line with developed markets in beginning of 2008, most of the other African countries are at a much earlier stage of implementing Basel II, or haven't even started. If you consider the Nigerian market, and I'm focusing on Nigeria as the second biggest economy after South Africa, and looking at those changes in regulation and the impact on markets where you probably have less liquidity than you would have in a developed market, and looking at the level of deposits in the South African market versus your longer term lending through mortgages, and the mismatch as far as that's concerned. Those are specific aspects which is unique, not unique, but relevant in developing markets that you need to consider in defining the regulation.
Well, certainly interesting time ahead. I mean, how do you see this changing the future of business itself across Africa?
If you look at the business environment, Africa the world has awakened to the opportunity in Africa. If you look at China as an example, who has over the recent past indicated the intention to grow and invest quite significantly and heavily into Africa. If you consider your developed markets, and America historically has been quite a large investor, they have over the past 2 years retracted to some extent, but don't want to stay behind. So I think as an African continent, we can only benefit, and with our wealth in natural resources, we're definitely well positioned for that.
Well, taking a look at the fact that we're seeing a change in the way business operates, one would assume this comes with a change in consumer behavior as well. And I was reading through some of your notes earlier, saying that the recent financial crisis is changing consumer behavior in Europe specifically. So what shifts are we seeing exactly, and to what extent do you see that surfacing on our shores?
If you consider the disillusionment with the banking system, and that's specifically focusing on retail banking, coming through the crisis where people are looking at the bank, and be it because of losses that was incurred or just the level of service where banks have been focusing on risk management rather than external from a client perspective. A lot of work needs to be done to retain existing clients, but also to grow your portfolio and client base. And in the South African market, although we didn't have direct exposure to the global credit crisis, we've had our own challenges following the high interest rate environment, implementation of National Credit Act. And it's quite a competitive environment with 5 large players and then niche players that competes in specific segments. And the focus should be to how do you retain your existing client base and at the same time grow in certain segments, and especially for your larger banks where they have to cater for the whole spectrum, whilst your niche players can focus on their specific segments.
Well, unfortunately, we've run out of time, Emilio, so we're going to have to leave it there. Thanks so much for having joined us this afternoon.